Are you surprised that markets aren't more rattled than we're seeing play out today?
Well, I think the initial response from markets on Friday was just the shock factor. But as you see continued news reports that the president is getting better, I think that the markets are going back to a status quo, which is that they're looking past most of these events. All of these things will eventually, the election will come to fruition. That eventually this virus will be brought under control. And those are the things that the market continues to discount.
That's fair enough. But Jack, I guess I wonder if, does the market just want an election outcome one way or the other? Or if this swings it towards Biden or towards Trump, is that the larger question? Or even the Supreme Court? I mean, I'm not going to say that's market moving, but it's certainly has dramatic policy implications. So do you think investors are just trying to figure out where we go from here? Or do you think that none of these events for now really make a difference?
Well, you're right, Kelly. I mean, I think this is a landscape that is just absolutely riddled with complications. But as we have seen in the past, markets more than anything just don't like uncertainty. And we are facing a profound amount of uncertainty, particularly over the next month, whether it is the president's health, the election, escalating tensions, new caseload in the United States. I think a result in November, regardless of who wins, will be taken by the market with a sigh of relief, because at least we'll get a little bit more clarity on what perhaps the next 4 years will hold. I think that's what's going on with markets now. To Gina's point, looking through current conditions into that new status quo.
Yeah. Gina, let me turn to some of the topics that Dom mentioned off the very top when he was talking about some of the industrials and materials names rallying today. The 10-year yield at 0.75%. I mean, break out the pom-poms if you're the banks. Those all are going to fit into this big discussion over whether you can kind of follow the reopening rotation or not. Whether you have to stick with the idea that, nope, COVID is spreading, it's going to be back to the stay-at-home stocks. What would you say?
Well, I think the rally of industrials and materials is a little bit of a head scratcher, because if you look at the macro data coming through the past month, we have seen a slowdown in the recovery, and that has been proven out by the data, the labor data. We have seen personal income falling, and there's yet no sign that a stimulus package is a done deal yet. And until we see that, I think the slowdown continues. So I'm not entirely certain why the industrials would be rallying at the moment.
Shepard Smith here. Thanks for watching CNBC on YouTube.